House is already burning, right? No need to burn the account. All right, so let's take a look at Euro New Zealand lower time frame here. So day trading wise, this would be something interesting, right? We know we came down to our structure on higher time frame. We've we've bounced off of it. This is like similar to the Euro Yen trade from yesterday that never played out. But if we can get a violation of this level, we have a little bit of a roadblock right here. But I would suspect that we travel up to this zone right there. This is a good amount away. Let's do a few things here, right? That's our B leg, by the way. Let's bring in the volume, pump it up. Oh yeah, you can see the spike at that level, the void in between. So, right, not bad, right? So that's our structure to structure move. And I forgot who I tell you guys all the time, but I simplified it the other day and said if I had to break down my style of trading, with structure being the backbone and spinal cord of my trading, pretty much my analysis is this. A keel, find structure. A keel, find next level of structure. A keel, if first level of structure is hit, then look for price to go to next level of structure. Like, I'm a pretty boring trader, but that's essentially what it is, right? I'm identifying a level of structure. I'm using my if then, right? If price violates this level, then, right, basic rules of IPDE, then I think price is going to go up. If price is going to go up, where do I think price is likely to go up to? And then I start by identifying key level of structure. Okay, boom, that's my trade. It's pretty simple, right, guys? Like, that's my trade. Now, we redefine it with fibs and we redefine it with volume and little other clues, right? But it's simple nature, right? Like, this is the area I want to take advantage of. And, you know, I say that because I think a lot of people, we had the conversation yesterday about trading strategies and, right, the billions and billions of strategies how we can break it down and like AB equals CD and I use this and I use that. But at the end of the day, I like to keep it very, very simple. And this is as simple as it gets. So let's take a look at this, right? You can do two things. You can look at this on the 5-minute chart. Start walking through your trading idea, right? If price action violates recent level of structure, then, well, let's if you're a breakout trader, right? If you're a breakout trader, what can you do after the violation? You can buy right away on the breakout, right? You can actually buy even before the confirmation. If you're very aggressive, I wouldn't be this aggressive, but if you're very aggressive, you can just put a buy stop order right above and say, hey, once it breaks out, boom, good to go. Or you can wait for confirmation. You can wait for confirmation of the breakout. You can buy as soon as that confirmation candle prints. Stops can go below that candle if that's your technique and look to trade it up to the top. And you got to, we don't know where the breakout candle would be, but you can probably get a pretty decent risk reward unless there's a massive breakout here. Another option is you wait for the breakout and then you wait for a little bit of relief. So price action breaks out. It gets a little bit exhausted. We pull back like your classic pullback trade, and then you look to take advantage of that next move up. So as a day trader, that's what I would be hunting and stalking here on the 5-minute. And of course, I would go down to a range bar chart as well because I love me some range bar charts. So this is Euro New Zealand. And I want to go down. This is a 13 range, which you can see it clearly here, right? The same trade premise. Here's our structure high. Here's our next level. The 8 range is going to be closer to the 5-minute chart. So let's go down to an 8 range. And again, just look for the same thing. Now, one thing on the range bar chart is you sometimes get a clearer picture than, or a not clearer picture. You're probably going to get more quicker candles, more candles than on the 5-minute. So if you're looking for a quicker reason to enter, the range bar chart may give you a better opportunity than the 5-minute chart. So you got that going on. And what's cool here is like you've already had 3 chances to do it, right? So here is where that market bottomed out, right? We bottomed out right here. We created our range. and I got a video coming out on scalp, or a podcast coming out on scalping. This isn't necessarily scalping, but this is a similar situation where you're just waiting for opportunity, right? So you had your first break right here, right? We had some divergence, you had some relief. Your first opportunity to buy would have been, do we have any higher high, higher closes down here? Right here. This would have been your first, assuming you're using a higher high, higher close, this is your first buying opportunity, right? Any other clues you guys see down here on the range bar chart? I'll give you clues. The same thing we saw relief up here, and then we plummeted. What happened down here as we got to our lows? You guys see anything with the RSI? Yeah, falling channel, RSI divergence, and then boom, you get your entry signal right here. That's your first buy. Price action rallies up. If you want to get fancy, right? We talked about this in the day trading course. We talked about this yesterday with Todd Brown as well, right? This is the thing where, like, hey, you take off a partial position off here, and then, right, as it retraces again, you add on to that initial position, right? And you can see the same thing happen here, right? We put in a fresh break, confirming the move, higher high, higher close, resetting the whole thing. So it starts over again. We come down, lose momentum once again, right? RSI divergence, get a higher high, higher close. That's your second chance into a trade right here, or a chance to add to your position. What are we waiting for now? Same thing, right? Let's wait for a fresh break and then a pullback and repeat the process. And the cool thing about, and this was the thing with day trading, was it's a gift and a curse. So if you're really good at it, you could do the thing where it's like, hey, position here, take one off, add one, take one off, and you just keep adding and taking on forever until it gets to your ultimate location. Or these are just different opportunities. So something I would tell myself as a day trader is like, hey, I set up my initial projection. I think price is going to go from this level to this level. And I fully understand that I may not be able to get involved in all of the moves, meaning I may not be able to get involved here or here. I may miss it because I'm asleep, or I may miss it because I don't get my entry reason, whatever it may be. But all I need to do is catch one of them. The market's going to give me, because it ebbs and flows, particularly here on the range bar charts a little bit more than the minute charts, because it ebbs and flows, I may have the chance to get involved in another opportunity. So you don't, and it helped me mentally because I didn't have to deal with as much as like the FOMO. The FOMO is hard because if you feel like, hey, I have one shot to do this, and this is, I guess, the downside of counter trend trading, right? The counter trend trading, you're typically not looking for extended targets. You're looking for price to go to one place, reverse at that one place, and then be out at another place, right? Because you're going against the trend. So there is a little bit more essence of FOMO there, because you're like, hey, if I miss this double top, this move could be over and I'll never get another opportunity. So therefore, you rush yourself into a trade because you're afraid that you're going to miss it. What I told myself mentally as a trend trader is that, hey, it's okay if I miss one. And by miss one, I don't mean like purposely miss one. Like that's never okay. But I mean like I don't get a chance to involve myself in one for whatever reasons, because there will be more opportunities. And it really helped my mindset shifting from like, this is the only thing I have to do, like if I miss it, I'm scum of the earth, to, hey, I'll just wait for the next chance. And I'll keep doing that until we get to that ultimate level. So kind of different ways right here for the conservative and the advanced. I was never a I was never a take half off, add another one on type of trader. I dibbled and dabbled once, which I probably shouldn't have been doing. When I thought that would, I can be a that type of trader. I was kind of like, hey, two targets or multiple targets, 2 or 3 targets, but I would never add to my position. Because I never wanted to add risk to a trade that was already in profit. But certainly a technique you can look at. We talk about it in the day trading course at the very, 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 very end of the training stuff. But yeah, so wait for your next fresh break here. That's important. That's what resets the clock, right? Higher high, higher close, and then see if we can get a pullback, and maybe we can get one more run up to that level. And then once price action runs to that level, then it's done. Then you ignore it. You right click, erase it, and look for the next opportunity that can run, right? So you do have to know where that stopping point is at. You do have to know where, hey, the game is over at that point. You guys are gonna make me day trade again. I'm not breaking out on Euro New Zealand. We were on an 8 range, right? Breaking out, so that's going to be step 1 of our need, right? We need a break and close above, which we technically got right here, our fresh break. So the next thing we need is going to be a pullback. Could be a false breakout. Yeah, could be. However, impossible to have a false breakout on a range bar chart. Did you guys know that? Impossible. So you can't have that on the range bar chart. So you don't need that fear. But again, here's the example, right? Let's go down to a minute chart. And a minute chart, you're going to look at stuff like this, and this is actually a rather clean minute chart. But yeah, I think is this a butterfly too? Oh my gosh, this may be playing right into our hands. I think this is a butterfly. No, maybe a deep guard. I think it's a butterfly. Butterfly, we're going to look for. Yeah, look at that. I bet it's going to hit right on the butterfly. What do we expect from a butterfly? Exhaustion after the extension. See how all these technical things come together? Right? I told you time and time, the philosophy of a butterfly pattern is that we extend and then we see relief. That relief comes right back down into structure and it offers the next pullback. So look at that. 2 things hand in hand working together. But yeah, I would say if you're going to be on a minute chart, you might as well go down to a range bar chart. Just gives you it's an easier ebb and flow to it, in my opinion, or like a tick chart, something like that. And you can see the same butterfly here as well. But yeah, so you got your butterfly. You know what comes after a butterfly? Some relief. Let's see if we can get that relief, right? We know our zone, minimum here, maximum there. Anywhere within here is the buy zone, right? That's how you draw a target or a bullseye, whatever it is. It looks like an eyeball, but you guys get what I'm doing here. Now you wait. Now you wait. Now, a few things that you can wait for here, right? Indicator-wise, well, let you guys tell me. You can't have a false breakout on a range bar chart because each bar is only a specific range. So this is a 5 range we're on now. Because each bar is a range of 5, it's gonna be impossible for the next bar to close below the previous bar. Because this bar is always going to start one tick above the previous bar. So even if this bar went straight down, it would close here because that would be the end of the 5 range. Yeah. So every time price moves out of a range of 5 pips, a new bar is created. So that's why it couldn't be possible on a range bar chart. So again, a few things you can look for during the retracement here. And again, the 8 range is what we really want to watch this on, but we're here already. But you can look for the RSI swap, where RSI goes directly from overbought to oversold. If that were to happen, you would also have hidden divergence, where you have lows getting higher on price chart, lows getting lower on indicator, right? For you guys that like other indicators, right? We can bring in, let's see, a MACD is a favorite for people. I want to see price above the 0 line. Let's see if we're above the 0 line. Yep, MACD is above the 0 line. Many of you guys like moving averages as well. So maybe you bring in a EMA. What do you guys like? 20 and 50? Is that your favorite? That's going to be kind of big here. 20 and 50? And again, this is just an example of bringing in whatever toppings you like on your cake or your ice cream, right? You're bringing these in for confirmation, or you have these in for confirmation, right? So with moving average, typically what people are looking for with the confirmation is that, hey, is price trading above the moving average, or is the small moving average above the big moving average? And that's going to be your directional bias. If you're using the MACD, you can see you're going to have almost the same exact things. You don't need it's going to be a little bit redundant, but it's up to you, right? You can bring in Keltner challenge or Bollinger Bands too. But Yeah, now you're waiting for your reason for entry. If you're an aggressive trend trader, here's your higher high, higher close right now. Again, this is on the 5 range. We were looking on the 8 range earlier. I don't know if you're going to get the same signal there. Yeah, not yet here. But that's what you're looking for. That is what you're looking for. All right, let's get rid of some of this stuff here. Boop. And I'll keep the moving averages on. So, yeah, good stuff. Good stuff. All right, price is retracing again here on Euro New Zealand. So guess what? Again, we had fresh break, pullback, entry. Guess we had another fresh break, pullback. This is another opportunity. Again, until we get to that 61 level, these are all opportunities to get involved. So as we're pushing back again, this is another opportunity either to add to your position if you're doing that type of thing, or if you missed this one for whatever reason, another opportunity. Again, this is the cool thing about range bar charts. Like they offer, I think this is probably the fifth opportunity we've had already. Right? And you can look at it here. Can't believe I'm still on this dreaded minute chart, but it does look kind of pretty today. Oh my gosh. You're going to go back. Someone's going to go on AI and find everything I ever said bashing the minute chart and then attach it to this and be like, see? But yeah, another opportunity. And these are all valid until we reach the target. And this is why I say, I told you guys when I day traded, 6 pairs was my max. And I know some people are like, I prefer like 4 pairs. Like how can you just track like 4 to 6 pairs a day? Like it's nothing. Well, if you're locked in on something like this, you can get a lot of opportunities on just 4 pairs. If you have, I always call them runners. If you have some runners, man, 4 is a lot. 6 is, anything over 6 was overwhelming for me. Because I just couldn't pay that much attention to more than 6 at a time. Now, the sucky part is you constant waiting and energy and looking at it. You can't go to the bathroom on the range bar charts because you may miss that entry. It happens quick, but that's part of it. All right. Ollie says, and probably last question before I get you guys out of here. Justin says, I'm already in the trade since this morning. It's a good day. Hell yeah, Justin. Hell yeah.